is going to replace what we have used for a long time period, the HUD-1, and it also includes a merger of information from the final two-page TIL. So you're going to have to get used to this nomenclature of closing disclosure as well as loan estimate, and gone are the GFE and HUD-1, at least for the loans that fall within the scope of the new rule. One of the controversial aspects of the proposed rulemaking was who would prepare and provide the closing disclosure. If you will recall, the proposal suggested two options. One was that the lender would provide and prepare, and the other was a combination of the lender working with the settlement agent would basically be an option. You know, this is an issue that the title industry lobbied hard on. We wanted to preserve the traditional role of the settlement agent, and the CFPB, to its credit, listened and actually had some fairly positive statements about the valuable role of the settlement agent in the process in the final rule. I think importantly, and keep this in mind, that there was emphasis placed upon the fact that the lender or creditor would remain liable even if they worked with a third-party settlement agent in certain components of this process. And I think another important thing is that they basically, the CFPB basically let the marketplace determine exactly what those roles would be as to how much the lender would do in relation to a given matter versus the settlement agent, and it could vary from lender to lender. So if you have multiple lender customers or clients, you could have different types of work flow and responsibilities depending upon which lender requirements you encounter for a given situation. Importantly, the settlement agent is required to provide a copy to the seller, and then as to the borrower, ultimately they're supposed to get one closing disclosure, and the settlement agent, if they're working with a lender, either that settlement agent or the lender would provide that. And so I think that this was a big win for the title industry as to preserving the preserving the role of the settlement agent. And I think some people have used the terminology shared responsibility. Most of the people that have commented on this suggest that this role preserves the traditional role, and it's going to be similar to current practice. All right, another component of that we're going to discuss next is basically when is it provided. And the rule states that the consumer must receive the closing disclosure 3 business days before closing. And that introduces essentially two concepts. Basically, you're talking about business day, and then you need to know the manner of delivery. And so those things we're going to discuss on the next slide. And so we'll kind of walk through a matrix of situations as to, and give you an idea about how far back you're going to have to disclose, provide the closing disclosure. Even though it says 3 business days, it actually can work out to be much more than that. And the seller independently must receive the closing disclosure no later than the day of consummation, which was called closing or settlement before. There's a carve-out for a bona fide personal emergency. That's a very limited exception. The situation that was noted was imminent foreclosure sale of the residence. There can also be some redisclosure requirements. Let's move to the next page, and we kind of have a working grid. And so to think about this, for one thing that I find interesting about this is that no matter whether it's 3, 4, 7, 8 days, and I'll get into those timing calculations in a minute, ultimately this whole area is going to require a significant change in practice from what's done currently. Because if you are working with a lender in preparing and delivering the closing disclosure, the sharing of information, the preparation process is going to be moved back in kind of the workflow, or the if you look at the closing predate, the information sharing is going to go much farther back than current practice, as much as 8 days, and I'll get into that. So you've got two parts here that are in play, one of which is the definition of business day. And remember, you must this must be received no later than 3 business days prior to confirmation. Well, business day under the rule excludes Sundays, and it also excludes federal holidays. And so in some instances, if there's a federal holiday within that 3-day period, for example, that would become a 4-day period. And Sundays, of course, are not counted as well. So if you then you also have to factor in the method of delivery. If you hand deliver and you have confirmed receipt, then the 3-day period is just a 3-day period. If you don't do that, you have to add an additional 3-day period, kind of like the presumed time period for mailing. Even if it's sent by email, if there's not confirmed receipt, there's the similar kind of concept is imported in that situation. So if you look at the grid that on this slide, it tries to walk you through, you know, exactly how far in advance you have to go. So if you have a closing date, for example, on the first grid, and you hand deliver or get confirmed receipt for a Monday closing, you would be looking at the preceding Thursday for delivery of the closing disclosure. Now, if you use mail, then that would move it back the preceding Monday. So you're looking at a 7-day period. And of course, if there was a federal holiday in that time period, you could be 8 days out. So I think this is significant, and I think we will all learn to adjust to this. There'll have to be greater communication between the settlement agent and the lender, and sharing of information earlier in the process to satisfy these disclosure timing requirements. So moving forward, I think a couple other things in relation to the closing disclosure that you need to be aware of is gone are the traditional line numbering that we saw in the HUD-1, and you know, we'll walk you through the design and a look of the closing disclosure in just a minute, but it's similar in display or graphic to what you just saw in relation to the loan estimate. Line terminology relating to title I'm going to touch upon on the next slide, but I think you also need to be aware that there's generally new terminology, and I've got a list here for the new rule. The lender is now the creditor, borrower is now the consumer, closing or settlement is referred to as consummation, the early till and GFE are now the loan estimate, the HUD-1 and final till the closing disclosure, and tolerance is now variance. And then the last concept on this slide is the alphabetizing of fees. I think this could pose, and maybe Mary as a software, you know, attuned to the software challenges in getting everything straightened out here from a software standpoint. The categories, the specific categories, are supposed to be alphabetized. I've had some questions or concerns raised, and I think that and Ben could confirm this, but I believe it's designed to allow for easy comparability. But I believe that some people are thinking that this will pose some challenges from the standpoint that different lenders might use different terminology. So from a comparability standpoint, it may not match up as easily as was intended. But essentially, you just need to be aware that there will be alphabetizing of the different categories on the form. Let's go to the next slide. All right, disclosure of title fees. Basically, the methodology here is you're going to use, if you see in the quote here, you've got title, and then after that you're going to have a description of the fee. For example, it could be for the lender's policy, you're going to have title-lender's title insurance, For the owner's policy, you're going to have title-owner's policy, and then you're also going to need to use optional. Now, on the actual, as they walk you through, the lender's policy is in the services you can shop for category, and we're talking about page 2. And another thing to keep in mind, if you look at the closing disclosure, pages 2 and 3 in the closing disclosure are essentially containing the information that would be in the HUD 1. Pages 1, 4, and 5 contain the additional loan information that is being merged in because of the merger of RESPA and TILA. Now, there's a little bit of a challenge here in relation to the calculation, but the rule itself walks you through how to calculate. So basically, if for the lender's policy, you use the full premium without any adjustment that might be made for the simultaneous purchase of the owner's title policy. You could also use the enhanced policy charge or amount if the lender knows that these products will be purchased. Let's go to the next slide. Now, as to the disclosure of title fees for the owner's policy, that's in the other category, and this is on the closing disclosure again. And to calculate this, it's the full owner's title insurance premium, adding the simultaneous issuance premium for the lender's coverage, and then deducting the full premium for lender's coverage. So basically, where you're in a simultaneous situation, they're looking at using the owner's policy as the incremental increase is basically the disclosure amount. And so this has been commented on as a bit of a challenge throughout the country because it's not always aligned with the manner in which the rate filings are actually disclosed. But I think that there's another factor here that we are working on, which is really not disclosed on the slides, and that is the situation where you're in a seller-pay jurisdiction for a portion or all of the owner's title policy. It creates some challenges in that, and we've had dialogue with the CFPB, and I believe a resolution will be forthcoming in some manner, but basically creates some challenges as to whether or not it accurately calculates the cash to close or basically what is coming to the seller's proceeds as well. And again, the last thing that we mention here is that the owner's title must be identified as optional, and that was one of the areas which the industry lobbied hard for, but unfortunately we were not successful in that regard. And I think at this point